Hey, good morning, everyone. Well, the 87 crash is finally on the mind of everyone. We talked about it last week. I showed you the charts. I'm going to put a link of that video down below this one, and you can go and look at the actual charts and what happened back then in 1987, which I showed it in that video. So, if the media has got your attention now about the crash, this isn't it. Um, we get sell-offs like this. I mean, look at the prior day, some other prior days here, and that's not to say that you know, at this time maybe isn't the start of a correction that maybe goes a bit deeper, but putting that in the perspective of what the markets are doing now, big deal at this point today. Um, if the market pulls back, it's in an uptrend on the daily time frame, and it's in an uptrend on the weekly time frame. And sure, there's no doubt it's a little extended. We already talked about that. So, where might it pull back to? I mean, in this market, it may just hold here and turn up. Look at these prior red days; they didn't go very far, but that's the sign of a bull market. I really are hopeful that it would pull back further and set up some opportunities. Where things turn up and can have a bigger move to the upside without this kind of churning kind of activity, which is extremely difficult to trade or get on board because it's already moved. And look, we just don't chase. If we didn't get in here or we didn't get in here, we certainly aren't getting in here. Right? That doesn't mean as a day trader you can't participate in this kind of price action. You certainly can. So let's see how far this is going to go, where it's going to end up today. As said, it's a little extended, so this might be the point where it pulls back a bit. But I'll tell you, the market internals aren't lined up to say that there's something big going to happen here on the downside. So we'll just play it as it comes. Here's the 5-minute chart of what happened. You got the sell-off going there last night, got a bit climactic. It bounced, didn't get all that far. And here prior to the opening, it's just starting to form a trading range here to see which way it might go one way or the other. And obviously it's got plenty of room, to drop to the downside and possibly, you've got this low here, you got the 20 sitting right here, widely followed. The 50 MA is, well down here. So, one of the ways of using moving averages, remember, they're just lines on the charts that we put. You've got lots of choices, which ones you use, exponentials or simple. I like the simple variety. Whether you use a 20 or 30 or 34 because it's a Fibonacci number or whatever it might be. It's just consistent. One of the easiest ways or most productive ways of using it is just what is the distance between this moving average and price. And we could just objectively look at that and say, hey, this is relatively close. There's been a bit of a correction here. When I teach my students is look to the left and see if there's anything in alignment with that moving average, because its price is where traders, smart traders, and institutional traders, they're going to be bidding for whatever it might be. Here we're looking at the futures. It could be, any stock. This is where they're going to be buyers. And there'll be buyers down here. But as it comes down, realize that this moving average is going to get a bit closer as it averages in more of the current prices and drops off the old prices. That's what a moving average does. As time goes by, it brings to drop off the old and bring in the new, and it catches up. And one of the things that a lot of technicians look at, or technical traders, is, does the moving average cross over? The shorter under the longer. Well, it did here. It didn't mean a big deal. It just turned right back up again. So those type of technical tools, as far as moving average crossovers, in hindsight, they go, look at that, how it worked out. Well, you have to look at the price, some common sense. Look at the bottoming action here, and prices went up as it crossed. The pattern said higher. Moving average cross said lower. Doesn't work. Okay, so at some point these will cross as they get closer together. But does the price actually tell you anything of significance. And that's what you need to be focused on. And that's the same thing if you're connecting the dots with trend lines. They don't mean anything, especially after a long run like this. You could get a breakdown through a trend line. It means absolutely nothing, right? Does it break through an area of what we call major support? All right, let's look at the NASDAQ futures here this morning, since everybody's focused on, this move down. Big red day, and then we'll see where it goes. It's sitting here on some support, same kind of pattern here intraday. The Dow, which was led by IBM, and we've talked about wide range bars in prior videos. So there's the wide range bar. One thing I spoke about yesterday was the possibility that we'd get a further extension. But since technology here is under some pressure, there's some selling this morning. We'll see if we get a red day by the end of the day, and then if it pulls back from there. But when you do get a wide range bar after a multiple bar move and the ranges are relatively equal, and then the range expands, it's time to say, hey, be careful here. They're getting, a little bit excited and throwing caution to the wind, and that's typically near the end of the move, unless it's the start of a move, like we had here. So there's a difference. Wide range bars igniting, wide range bars ending. Okay. Let's see. Gold is up here a little bit. Not a big deal. Not really interested in that pattern. Oil up near the prior highs. So it's going to be interesting to see what this does here in the coming days and week, to see, is this a double top here, a little mini double top where it starts to drop. I assume that'd probably be a little bearish for the equity markets as well. Or can it go sideways here a bit and then go higher? In addition to that, we'll be watching interest rates and what they do. Well, these are bonds. Interest rates go opposite of that. So this intermarket analysis plays in a lot into the big picture of what's going on here. A few stocks that are moving here this morning. Apple. We're talking about iPhone, low demand for iPhones. The new 8 model. It's run up. Not really a big deal here. You got to put some of these things in perspective in the news. Bob is down about 2.5, which has been doing well, but notice the slowing momentum here. Right, strong momentum. It's okay, but weakening, and we see that by the distance between the highs here. See how it's getting a little smaller, and then the reversal, and now it looks like a little buy setup might be failing there. And NVIDIA, which has been super strong, it's down about 3. Netflix, which didn't really produce much, little excitement prior to the earnings. Now it's down, and Amazon had a bit of an ugly day yesterday where it started up and ended down, and see it's down here pre-market. So we'll see where this day goes. Remember, I'll put the link to the video about 1987. You might find it interesting and enjoyable to take a little travel back in time there. Have a great trading day.